Jim Cramer. Everyone loves Jim Cramer, Mad Money, CNBC contributor, host. He now thinks that the stock market is full of absurdity, which is a great line from Jim. He essentially has come out and said all sorts of different things. We're going to go through these various quotes from him. I think we got 4 of them. First, of course, when a linkage gets, Jesus Christ, Jim, attenuated, it makes you wonder. What? Igloo. Of course, when a linkage gets you iglooed, it makes you wonder if the market has completely lost its mind. Do we really believe Apple's stock should rally if natural gas falls from $6 to $5.50? He's specifically talking about a linkage between natural gas and technology stocks, saying that the rising price of natural gas is playing a big part in the recent move in higher bond yields and also plays into investors' inflation fears. So the whole idea is that now he's making a assumption or a linkage between natural gas and technology stocks. Natural gas goes up or down, stocks are going up and down as a response. So second quote here is Apple's market capitalization might literally grow by $50 billion if natural gas breaks down below $5.50, even though there's no direct connection. But like it or not, that is how this market works, at least for the moment. So again, he's talking about that there is this correlation between natural gas and the technology stocks, which goes back to his idea of this is absurd. There's no natural connection between those two things, but that's what's happening. And then he says, quote, it's not just the tech natural gas linkage. This market's full of absurdity. So this is just one of many things that he has identified. And then lastly, he has a comment about Warby Parker, which had its market debut on Wednesday of last week. They went public via direct listing. The stock closed at $55, up about 40% from its $40 reference price. And Warby Parker is now valued at more than $6 billion. He said last year, Warby Parker raised a bunch of money at a $3 billion valuation, and almost nothing has changed since then. So either the people who got in on the last round of private fundraising are some of the savviest investors in the world, or the people buying it up here today are a bunch of suckers. I'm guessing the latter, which are pretty strong words coming from Jim Cramer. But I do think that Warby Parker is probably the better example, easier to understand for folks, is last year they raised money at a $3 billion valuation. Most of the fundamentals and the financials of the business have not changed. All of a sudden now the company is valued at almost $6 billion, so almost 2x in valuation. And all they did was they now got market liquidity. There should be some liquidity premium, meaning that as soon as they're able to expose it to more investors, if investors like the company, it should trade up because there's a wider group of people who want the demand. But this is a perfect example of why so many of the hedge funds and public market investors are now pushing into the private market. If there is no difference between the business, for the most part, between last year in the private market and now in the public market, of course, these public market investors want to buy it earlier. They want to go buy that pre-IPO round so they can get it at $3 billion, and then it's going to pop and it's going to be $6 billion, and then they likely will sell a big portion of what their position is. So that ends up being a driving force for public market investors to go into the private market. On top of that, you have these absurdities that Cramer keeps referencing in terms of linkage between natural gas and technology stocks, or companies that are going public and just immediately trading up without any change to the financials or the fundamentals. Are we worried about that continuing to happen? Is there anything around the stock market that we think is actually real at this point?
The correlation between natural gas and bonds and technology is a little concerning, and that's a little absurd, to be honest. But the Warby Parker thing isn't really shocking to me, right? Public market got its hands on a stock when it IPO'd and the price went up. Makes sense to me.
Joe, what do you think?
Yeah, I agree. I mean, look, there's a lot of absurdity in the market. I don't think most logical people would argue against that. I think it's just kind of filtering out and finding where the true value is. But yeah, you look at some of the stocks and kind of the what's happened over the last years, not even in the public markets, but in the private markets also, with some of the funding announcements that have happened and some of the ways that these companies have aggressively started to compound their valuations and grow over time on a multiple basis is really quite scary when you look at it. There's just so much capital and inflows into the system right now that people are just looking for investments, right? And they're going further out the risk curve, and they're doing things that they normally typically wouldn't do in a normal cycle. So we'll see. I think time will tell. Obviously, like when kind of the market declines over time, people naturally get more scared. Like this isn't, it's certainly unique, but it's not something we haven't necessarily never seen before. Like when people lose money in the stock market, if it ever goes down and stuff like this, it pulls back that risk curve and people start to be a little more cautious with their money. So I think the linkage is kind of a little scary right now, but over time it'll correct itself.
Do we feel like there is just pure arbitrage going on between those late stage private market rounds and the public market? Or do we think that there's potentially information that the public market investors have that the private market doesn't, and that's why they're willing to trade up?
No. You're talking about it like when they IPO?
Yeah, like why is it trading up? Is it because there's actually a difference in the evaluation, or is it just because people are being stupid? Polina?
I think people are just being stupid. Like, so I remember when I was at Fortune last year and all these private companies were like, ooh, I think we're going to delay our IPO because we don't know how the virus will affect the markets. And then we've seen quite the opposite with all these companies now rushing to go public because people are going to buy things.
I also think that there is, people don't value the disconnect between the amount of people that want to invest in private companies but do not have access to do so, right? So when that stock becomes public, there's a mad rush of not only people, but cash into these assets that people want to go do. So that's why you normally see some of this pop. And then it just depends on kind of how many shares are outstanding, what kind of the economics look like on it. And yeah, 30, 35, 40% jump on day one is that's a lot. But ultimately, is it really, right? Like,
and this was a direct listing. This wasn't an IPO where they manipulate the price lower. This was a direct listing and still popped.
But people want access to these companies, right? And it's companies that Warby Parker is kind of one of those trendier names, or those companies that has that a lot of people have been interested over the last few years. It was the first time they had access to it in the public markets. They went and bought the stock. 30, 40% is a lot, but no one would have said anything if it was 10, 15, 20.
Along this point, do we think that there's a big correlation between the people who want these stocks, and that's why all of the SPACs and all of those types of stocks exploded, is because they felt like they were getting access to what would have been private companies a little bit earlier, and so they wanted to go ahead and jump in?
I don't know. Like, the SPAC market was absurd. I think that was like one of the most absurd things. But yeah, it speaks to it. Like, everyone, like, SPACs were essentially just literally, there was hundreds of SPACs going around just offering people shares in the SPACs, advisory roles, cash, whatever it was, entertainers, athletes, anyone, right? Anyone famous, just to attach their name to these things and get them to trade a little higher. So I think that was more of an example of like too much capital in the system and people looking to make investments. But like, I don't know, Warby Parker, Robinhood, all these companies that were like popular in people's minds over the last 3, 4, 5 years going public, you can see why those would appreciate in value immediately.
63% of the U.S. IPOs this year have been SPACs.
That's crazy. 63% of all U.S. IPOs.
709 U.S. IPOs, 447 SPACs.
But we've already seen that's already falling off over the last 2-3 months. Most of it was in February.
Yep.
And, those few.
This whole market mechanism. The other piece of it that's really interesting to me is look at what we did from the venture fund standpoint. Right, when we went out on our own, what I was able to do was go directly to the people. Right, have a larger social following, go directly to the people, get them to invest, and say, look, I don't need any institutions. It's literally just the people themselves. And then over time, as more institutions say, hey, we want to participate as well, you can bring institutions in, but you can go to the people first and then institutions second. What's up, guys? Bang, bang. A bunch of you want to bring that trillionaire energy every day. And if you want to do it in your financial life, go use SoFi. SoFi is our exclusive sponsor because we think they've got a great piece of software that'll help you accomplish your financial dreams. Go to SoFi.com/pomp today to get started. You can invest in everything from ETFs to individual stocks to cryptocurrencies to IPOs, and they even have an automated invest function. Head on over to SoFi.com/pomp today and make sure you come back tomorrow to watch more of the Best Business Show.